welcome back to Prometheus Capital, where we read charts the way philosophers read ancient scrolls, slowly, carefully, and occasionally with existential dread. Let's begin with the battlefield itself, the S&P 500. As of Friday's close, the SPY sits at 671, down just 0.02%, basically a rounding error, but after hours pushed it to 673.34, showing buyers stepping in before the weekend. Now take a look at the weekly chart. This perspective tells a much deeper story. We're still well above the 615, 620 support zone, and we recently tagged a swing high around 682.06. The overall structure is a controlled uptrend, not a blow off top. Look at the EMAs. EMA 20 is above EMA 50, both sloping upward. Textbook bullish structure. Price is sitting comfortably above both. A sign the major trend is still intact. RSI on the weekly is around the mid 60s. Warm, not overheated. MACD histogram is positive, but you can see it is flattening, which usually signals consolidation rather than a full reversal. Now, historically, when SPY is above a rising 50-week EMA, the market is in a macro uptrend. Since 1950, those periods have delivered the bulk of the S&P's total returns, actually. Markets tend to drift higher more often than they crash, which is why staying aligned with the primary trend matters more than winning every single little wiggle. We're also in a key zone where long-term bull markets often pause to breathe. It's like climbing a mountain. You don't sprint the whole way. Sometimes you stop, drink water, and question your life choices before continuing upward. The S&P right now is doing exactly that. What does that mean for Monday? We're actually not seeing weakness. We're seeing compression, which typically leads to a continuation unless we get a macro shock. Key levels going into Monday: support 665, major support 615. Resistance, we're seeing that at 682 and then 690 to 700 zones overhead. Break 682, you can see a renewed push towards new highs. Fail 665, and buyers probably reload lower. So right now, SPY is behaving like a responsible adult, steady, disciplined, and not doing anything crazy. Meanwhile, our small caps and meme stocks are behaving like toddlers who drank Red Bull. Now, let's move from the stock market to the part of finance that actually calls the shots, bond yields. As of Friday's close, your screen shows the 2-year Treasury yield, 3.608%. Off screen, I'll show you with the 10-year Treasury yield, 4.148%, exists a spread of about 0.54%, a pretty flat curve. Why this matters? The 2-year reflects expectations of Fed policy. The 10-year reflects expectations of long-term growth. Together, they act like the true power behind the throne. SPY looks important, but yields are the ones shaping the entire market mood. Think of the 10-year like Al Capone. He barely shows his face, but somehow every part of Chicago answers to this guy. That's the 10-year today. Quiet, hidden, but every sector in the market does exactly what it says. Okay, here we have the 10-year chart. Now, when I say it's more deeply inverted, recession concerns, growth hesitates. When it's steep, the economy is heating, a strong expansion. When it's flat like today, this is important. There's cautious optimism and selective risk taking. It's not full out risk taking, but you'll see more risk taking by institutions. When there's flattening phases, especially after a long inversion, that often marks the stages of a new bull cycle. Historically, this is where indexes grind higher and sector rotation becomes profitable. Think of it as the market saying, we're ready to move higher, just waiting for Capone to give us the nod. What this means for Monday: if the 2-year spikes up, expect short-term caution. If the 10-year drops, semiconductors and techs might catch a bid. If the spread widens, risk appetite actually increases. And on the inverse, if spread compresses, volatility will return. Right now we're in the middle zone, the most important zone for traders like us. It's the environment where smart positioning pays off and emotional trading will get punished. Bond yields are the gravity of the market, and next week that gravitational pull looks stable but influential. Okay, now let's zoom out and talk about what really mattered last week, sector rotation. Here's the 1 week heat map, one of the most powerful tools you can use to understand where institutional money actually went, not what people talked about and what got funded. Tech was the clear winner for the week. Right away, the heat map shows technology was dominant this week. Microsoft's up 2.69%, NVDA up 1%, Apple up 1.47%, AMD green, Palantir green. Software and semiconductor blocks are going like freaking Christmas lights. Even in a cautious macro environment, tech held the steering wheel, especially the big liquid names. This tells us institutions are completely comfortable allocating to high quality tech instead of rotating away. Semiconductors quietly outperformed. We have NVIDIA green, AMD green, AFGO, Broadcom. It's red, but it's kind of idiosyncratic. The group overall held strong. Micron, MU green, solid plus 2-3% move. When semis hold their ground into Friday, it usually means strength carries into Monday or Tuesday unless the yields spike. Energy is mixed but lean green. Energy is small in the heat map, bottom left, but the majority of energy names are green. Not huge percentage moves, but broad participation, which is important. This usually signals early accumulation, not a blow-off. Consumer cyclical was a weak link. Amazon minus 4%, Tesla minus almost 6%. Retail names red, auto manufacturers deep red. This sector dragged the index, and historically when consumer cyclical rolls over, rotation often moves towards either tech, which happened this time, or defensive. As we see, defensive sectors were mixed. Healthcare, LLY plus 4%, J&J green, good action at the top of the sector. Utilities mostly flat, small greens and reds. Staples, KO, PEP, waste management looks stable, not explosive but solid. Financials were soft, JMP red, V red, BRK.B reddish. Not panic but clear underperformance. That usually means market is not in a high growth euphoric type cycle, but a selective cycle where institutions are buying quality, selling cyclicals, and ignoring the banks. Now, what this heat map actually tells us is that this isn't a random. There is a pattern to the madness. Institutions sent a clear message last week. Accumulation, tech and semiconductors, stability in healthcare and staples, some early strength in energy, weakness in consumer cyclical and financials. If you think about it, next week's setup, this heat map is basically giving us the cheat code for Monday. Tech remains the leader unless yields spike. Semis may offer the cleanest chart setups. Energy is your early theme type play. Healthcare is your safety valve. Consumer cyclical is a fade unless you see capitulation. Financials, just avoid that for starting next week. This heat map is your treasure map. And next we're going to zero in on the strongest sector and to find the cleanest stocks and options inside of it. Our sectors, let's drill into actual stock plays that make sense heading into Monday. We'll cover 3 from tech/semis, 1 from energy, and 1 strong defensive name. These are the names that showed the clearest strength on the weekly heat map, and they give us the highest probability setups. We got Micron, it's the cheap semi play with a clean trend. Green on the heat map, less expensive than NVIDIA or Broadcom. Good liquidity for options. More room to run compared to some of the mega caps. And we was forming a stair-step uptrend. Buyer stepped in on a weakness last week above short-term support. And we can also look at NVIDIA as well. So why NVIDIA? Sector leadership, of course, up on the week. Largest semi-name attracting flows. Holding trend support. Buyers still defending dips. Volume steady. Trade idea, stock high capital is required though. Options better with spreads due to their premium. Example, we have the 45-day debit call spread. Avoid of course, short-term out-the-money trades. NVDA, of course, still drives the semiconductor story. When NVIDIA is green, the entire chip sector tends to follow. Third one we're going to recommend is Microsoft. It's really the market's, think of it as the market's emotional support stock. It's up 2.69% on the week, last week. Strongest big tech heat map. Excellent liquidity, extremely stable trend. We have setups above short-term moving averages, big green candles during a mixed market, clear leadership in software. So stocks, buying the stocks is the idea. 30 to 60 days, slightly in the money calls, tight spreads, of course. It's one of the safest tech option plays. Also, let's not forget about energy. So we got ExxonMobil. Why Exxon? Energy sector slightly green across the board. No heavy selling. Early stage rotation, tight consolidation. The setup, we're testing EMA support. There's no breakdown in sight. Volume rising, slowly accumulation. Stocks are good. Options, call spread at least 45, 60 days. Deep in the money call for slower trends. Energy's not like flashy right now, but that's exactly when smart money starts accumulating. And lastly, we could look at Eli Lilly. It's one of the biggest weekly winners across all sectors. Plus 4% last week. Trades like a growth stock in a defensive sector. Long-term institutional favorite. Clear uptrend, strong volume, higher highs and higher lows. No technical weakness. So you can buy the stocks. Options are kind of expensive. Premiums, use spreads. Low risk debit call spreads. If you want safety and performance, Lilly's a king. Move smoother than half the tech names on the board. Now these 5 names give you exposure to leadership sectors, semiconductors, mega cap tech, early stage energy rotation, defensive healthcare strength. Each one has a clear technical setup and option strategy tied to it. So you're not just guessing, you're building a structured game plan. Because tomorrow we'll record a special Sunday video to set up our Monday watch list and Monday morning pre-market video as well. We'll break down the biggest movers in the overnight futures and the real-time probability plays. Everything we do here is transparent. If we take trades, we'll show them. If we avoid trades, we'll explain why. If the market shifts direction, we shift with it. That's the Prometheus Capital way. Clarity, discipline, and growth. Thank you for watching. Thank you for supporting the journey. I'll see you in the next one. Stay sharp, stay focused, and let's have a strong week.